this has been my best performing stock post-COVID. And I'm not saying like how much at the top. I'm talking about that I still own, right? Because everything else ran way past their COVID levels in the short term and came down. These guys got back up to it and are still there, right? They're still there. And the reason I like them is because here you go, what we're talking about, okay? 626 consecutive months of dividends. They've never cut their dividends. Let's talk about their portfolio. Obviously, everybody's concerned about recessions and everybody's concerned about commercial real estate and work from home. Sure, but they're not leasing out to fucking tech companies that are going work from home hybrid. No, they're not, right? These guys have massive clients that are brick and mortar, right? They're not going to lose it. So we've got CVS, we've got Home Depot. I mean, we've got massive companies that are going to pay. And the reason that they're the only company that didn't immediately gap up in 2020 was because they had theaters and gyms, right? And so people were kind of concerned that they're not going to collect their money, their rent from the leasing out of these properties. But those guys all took loans, PPP loans. They took bank loans, whatever. They held through. They paid up their leases. They weren't behind. I think they collected 98.3% of all rent that was owed without having any defaults, any lapses. It was great. And I was like, okay, I'll continue to do this. You're going to pay me out this kind of dividend. You've got a strong portfolio of brick and mortar stores that are not in any immediate danger of shutting down due to work from home or hybrid, right? These are all brick and mortar stores that are going to stay that way. Yeah, I'm gonna keep it. 627 consecutive months of dividends and 117 dividend increases since 1994. Remember how I tell you guys about my 90% of my money in long-term investing? I don't do meme shit in there. Okay, some of it's like speculative, like Intel and other things like that, but I do research and I make sure that I'm getting good long-term shit. So here's who they rent to, and I can get you the actual numbers, but this is why I like them, because once again, these are things that people are going to continue to go to. These aren't like, if there is a commercial real estate collapse or a crush that happens from that, it's going to happen, a lot of it from space that's rented out to businesses that are having to deal with the new hybrid models, right? So you're talking about like Salesforce, right? They're cutting up all of their office space. Apple, Google, these places that rent out large. I mean, Salesforce is actually having to rent out the space they own now because they can't even keep up with it. So you're talking about a lot of companies that are dealing with this right now. A lot of companies are dealing with the fact that they just can't sustain with the forcing everybody to come into work, because everybody's going into work from home or at least a hybrid model. You've got unionizations going everywhere. You've got people that are just not doing it. You've got massive quits. So that's something in technology and startups and biopharm, right? But these are businesses that are not going anywhere, right? So here you are, 10% grocery stores. Grocery stores aren't going anywhere. And even if people start doing more deliveries from grocery stores than going in there, doesn't matter. It's actually better for the grocery stores, but you don't care. Remember, this is why I need you guys to separate what the business's models is and how much money they're doing versus are they going to still be leasing out this space, right? So grocery stores, even if grocery stores take a hit, like they won't, like they're going to have a better bottom line when they go full automation, because they're not going to have to pay for sick leave and overtime. They don't have to pay for insurance. They don't have to pay for any of that, right? They're just robots. So you might say to yourself, well, that's good or bad, whatever. If you like it, doesn't matter. They're still going to need a place to rent, right? They're still going to need business spaces, right? Because it's too expensive for them to just go and build their own standalone stuff. They rent it, right? So you've got grocery stores, convenience stores. Sure, convenience stores in 15 years might be different when we have electrical power stations, but whether it's gas or electricity, people are still going to need to go in and get their cigarettes and their drink and their lotto and whatever, right? Dollar stores. If anything, dollar stores are going to be even stronger going into a recession. Sure, they're no longer the Dollar Tree, they're the $1.25 tree, but regardless, they're not going anywhere. Restaurants, people will always go out to eat. It's just part ingrained in our nature. I mean, DRI has been getting upgrades because of how many people are going back out to eat right now. Drugstores, not going anywhere. Restaurants, casual dining. Now remember, quick service, this is your fast food. Do you think McDonald's, Chipotle, and those guys are going to be disappearing in the next 5 years? No. Casual dining? No. Olive Garden's still going there. Home improvement. Okay. Lowe's, Home Depot, not going anywhere. Especially with the influx of people buying. And if we do have a market crash, people are going to be flipping houses like crazy. 2008 and whatever, all over the place, right? They're going to be doing improvements. People are going to be doing, that's not going anywhere. Health and fitness, I mean, we're getting fatter and fatter, so sure, that might be something that might go away, but every now and then you convince people to go work out. General merchandise, automotive service. None of this, especially with the top weight here, is going anywhere. Walgreens is not going anywhere. Dollar General is not going anywhere. 7-Eleven, Dollar Tree, FedEx. I don't see any of these. AMC Theaters is the only one, but that's 1.6%. I don't see these disappearing. Retail, 84% here. Their biggest regions right now, Texas, the UK. Oh, God. Oh, God. When did that happen? When did the oh, no. Whatever. California, Illinois, Florida, Ohio, Georgia. Occupancy, look at this. 98.6%. The lowest they had was 96% in 2010. Even in COVID, they were at 97%, and they're back up. They didn't lose. They only gained. Occupancy does not go down. They're always at full occupancy. They're not paying me for this. Somebody asked me a question. 5% now, but it pays out monthly. So you're getting almost 0.5% monthly compounding, guys. $5,000. I don't know how many years. Let's say 20 years. So 120, so 240 months. If you never added another dollar, if the stock never went up, nobody holding that for 20 though, LOL. That's funny because this company has been paying dividends for, 30 years straight and has increased it 114 times in the last 25 years. I'm not trying to turn you into a boomer. No, I just want you to be, remember, one day you're going to stop watching me or I'm going to stop streaming. That's inevitable, right? But you can have things that set you up for life because you did that. I'm not saying that you should go all in on dividends. You know how they used to say go in 60% stocks and 40% bonds or whatever the fuck it was? I now don't like bonds right now. I don't like this bond market. I think it's shit. Obviously, it's going to bounce back at some point. I think equities are scary. I think this next 2 years is going to be the years of the divvies. Remember the whole first 6 months this year when the market was tanking, but our dividends stayed fine? Because dividends are a safe place. And normally bonds are a safe place, but they're you can't even go into the bond market right now. It's trash. So where do you put your money? It's cycling from equities to crypto to bonds to treasury, whatever. But I think that if we chop and stay between a range of whatever, 350 and 400 or 360 and 420 for the next year or two, I think divvies are going to be awesome because they'll probably stay flat. People aren't going to sell them. And even if it falls, you're getting a higher divvy percentage. It compounds and then it goes back up. I love how you guys think. You guys got to get this idea that this money I have invested now is the only money I'll ever have. So I got to make the most out of it right now. No, you buy shit, you hold it. You're going to keep adding money over time. What if they cut the divvy? Then you sell the stock. Oh, okay. Like, just stop. In my SEP, in my self-employed IRA, I have O. I have a position, okay? Now, I want to show you something. This entire time that the market has been doing its thing, okay? I want you to see what's been happening behind the scenes, okay? These are dividends that pay me out every month or every quarter. And as the market goes down, I get more money or more free shares because I reinvest it on the way down. Every month, O pays me out a dividend. Every 3 months, MO pays me out a dividend. And because I have dividend reinvesting, what it does is it takes that money and just rebuys shares. And on the way down, as the shares are getting cheaper, I'm buying more shares for free, right? That dividend buys more shares because it's worth less and it's the same amount of money coming in. So notice how my dividend keeps going up because what happens? Every time it buys more shares with that dividend, the next dividend payout, those shares that got bought with the dividend pay out a dividend as well. And it compounds and compounds and compounds. I haven't added any money to it. I want you to look at it. 24.82, 24.91, 25, 25.15, 25.23, 25.33. All right? 35.37, 35.50. Now, this is when the stock went down. As the stock is going down in this market, the dividend pays out more money. Because remember, the percentage that a dividend pays out on a stock is not how much it's going to be forever. That's how much, because it's paid out in a dollar figure. And it's based on what the stock price is the percentage. If the stock price falls, the percentage is higher. So now I get more free shares without doing anything. And the next go around, the dividend's even higher because those free shares are paying out, and so on and so on. At 58.53, okay, I'm almost to a full share, almost half a share every month. And that half a share is going to pay me a dividend. And in 2 months, I have a free share. And that share is going to pay out dividends for the rest of its life. And I want you to compound that every single, not yearly, not quarterly, every month. All of these stocks are just compounding. And the best part is that if we stay flat, not a bearish market, not a bullish market, just stay bear market territory for another 2 to 4 years. Some people are like, well, Stocky, inflation's high, bonds are shit, the market's not going up or down, I don't know what to do. And the whole time, I'm fucking compounding like a bitch right now. It is insane. And even if they dilute this thing down to fucking $50 10 years from now, which they're not, I just keep collecting them. And then now I have all of these dividends that continue to pay dividends. And if that stock goes back up or stays flatline, I can actually live off those dividends, or I can just take that money and reinvest it somewhere else. Everybody wants to get rich quick now. And that's why everyone goes broke quick, because it's so easy to sell you a dream. I could be sitting here telling you that this will make you rich now, and you're going to get this, and this is going to explode, and buy this and do that. That's not my job. My job is to set you guys up for success for the long term. Okay, whether it's refinancing your house, understanding credit, understanding, benefits to you. I want to set you up. I don't want to tell you what to buy, because everyone has their own thing. Like the people in chat, they're saying, well, what about this? What about this? That's fine. It may not be for you, or you may want to lower your exposure or increase your exposure. I want to give you these alternatives, because if you set aside the vast majority of your money in long-term shit that you don't pay attention to, and you still have fun with a little bit of your money, sure, you might take this money and gamble it, make a bunch of money, and then you can buy more. Or you keep rolling it until you blow up the account. Or you lose it all, but then you've locked in this long-term shit. That's what's so important. That's what's so fucking important. I think I scared the shit out of the kid at Home Depot, but I think I did it for a good reason. So I went to Home Depot. I was at the tool rental place, and we were talking, and there was a guy, and somebody had said something about crypto. I heard somebody say something about crypto, and I was like, oh God. And I said, he goes, yo, man, what do you think about crypto? And he was talking to each other, because he's an older guy talking to a young kid. And the kid's like, oh, I don't know. I heard about this. I was like, oh, shit. And I said, guys, I'm not a crypto person, but just my thing is that, don't follow every trend you see, okay? I mean, there's a lot of people out there doing a lot of shady shit. I said, let me tell you something right now. You work at Home Depot. I said, are you taking advantage of the share program? And then the older guy sitting next to me was like, yeah, man, they give us 15% off. I said, all right, forget stocks for a minute. If I told you right now, give me $100 and I'm going to give you back 115, what would you do? He's like, hell yeah. I said, that's right. You're getting a 15% immediate return on your shares. I said, how old are you? He goes, 19. And this is where I fucked up. I was so into the moment. Like the kid was like having an epiphany. I said, listen, I'm 37. You see that box cutter you have right there? I would literally pull out my nuts and let you cut off my left testicle right this second if I could go back to being 19 and know what I know now. I was just in the moment. I was so passionate about wanting this kid to just, and I'm not making a story up. I said this to the kid. I was so fucking passionate that I was like, I would let you slice off my left testicle right this moment if I could go back to 19. And he kind of chuckled, but kind of like that I'm in danger chuckle.
I'm in danger.
Make the last 10 minutes a YouTube video. I can't take notes fast enough. Oh, nobody watches my YouTube videos.